Welcome to lesson 3, Banking Explained. In this lesson, we'll cover what banks were originally intended to do, what they currently do, and what the future of banking looks like for us in this new digital economy. So let's get started. If you paid attention during our previous lesson, we talked about the evolution of money and how gold has been the most consistent form of money for the past 100+ years. So during that lesson, we talked about how the banks eventually started to issue notes that represented that gold that they had stored in their vaults, right? So the original intent of the banks were to store our wealth. Eventually, that graduated or that evolved into the banks getting the idea to say, hey, well, we're holding this money, we're holding all of this wealth. We can actually make more money by lending it out and earning interest. And in exchange for lending your money out and earning interest on it, we'll pay you a percentage of that interest that we earn. So it sounds like a great idea, right? So their heart may have been in a good place originally, maybe not, who knows? But the concept was good in theory. Hey, I'm going to let you hold my money because what are you going to do? You're going to protect my money. You're going to protect it against theft. You're going to store it so that I don't have to worry about storing all of this gold. And then you're going to help me grow my money. You're going to help me grow my wealth by lending my money out and allowing me to earn interest in a very easy way. Not only that, to top it all off, you're going to give me easy access to my money. So I don't have to carry gold around. I can carry these notes around that represent money in exchange for allowing you to manage my money for me, so to speak. That was the original intent of banks. Now, what I want you to understand is that has changed over the years. So those activities are called banking activities. And we're very capable of doing that ourselves with the way that technology has evolved over the years. So now we have the technology to store our money, to store our wealth, to protect our wealth. And we can get the knowledge and we have the resources available to us to grow that wealth. So those are things that we'll be focusing on. Those are things that we're focused on in this course to help you store your money, protect your money, and grow your money in ways that the banks would normally do. But the only difference is now that you're in control of your own finances, you have a much higher upside potential because you don't have that middleman draining you of the interest that you gain, or charging you on overdraft fees, or charging you these crazy account maintenance fees, which makes no sense because they're charging you to do them a favor, so to speak, right? Originally, those interest rates made sense, right? Maybe the interest rates were 5-6% originally. Now the interest rates on savings accounts for putting your money in the bank and leaving it with the bank is less than 0.1%. So that means you're not even beating inflation. Inflation is at least 3%, so they say, but some leading economic experts have reported that inflation is actually higher than 3%. We'll get into that more in another lesson, but it's really important for you to understand the key components of what a bank does. It stores your money, it protects your money, and it grows your money. So we talked about the origins of banks and what their original intent was and how they were supposed to help us, right? But fast forward to today's time and age, right? We're getting hit with overdraft fees. Our interest rates are pretty low. Inflation is extremely high. And when it's time for us to borrow from the bank, they send us through these hoops and hurdles. And oftentimes we get no benefit of leaving our money with them. Meanwhile, they're taking $1 and they're turning it into 10, and they're using that to make even more money hand over fist, right? While we're sitting on the sidelines, getting our wealth sucked away from us. So what that means for us is our future generations suffer because, for example, if we put $100,000 into a savings account over the next 10 years, that based on inflation, that $100,000 will no longer have the spending power of $100,000 today. That $100,000 will only have the spending power of $70,000 because of inflation. Is losing value every single year. So by putting our money in the bank and storing most of our wealth inside of money or inside of US dollars, we're actually doing ourselves a major disservice. So if you've seen during the pandemic, the Fed, the federal government or the federal bank, they've been printing and pumping more money into the system than ever before. So if we know anything about supply, demand, and scarcity, we know that if there's an oversupply of something, that reduces or depreciates the value of that thing. So as they print more dollars, it depreciates the value of our dollars. And that's why you see these huge companies and corporations putting a large portion of their company reserves into Bitcoin, because it costs, the opportunity cost of holding dollars versus holding Bitcoin is astronomical. One is increasing in value while the other is decreasing in value. And when you look at it in very simple terms like that, you see that holding Bitcoin for long term as a storage of wealth, as a store of value, is a much better decision, or could be a much better decision than holding US dollars as our current economic situation continues to progress and they continue to print more and more money. So there's a couple of things I want to touch on. One, I want to touch on how banks are evolving and how this new ecosystem is creating the resources and the tools that we need to actually be our own bank. The central banks are creating something called a CBDC, central bank digital currency, right? They're creating their own digital currency using the same technology that Bitcoin operates on, which is called the blockchain, right? We won't go into blockchain too much, but just understand it's a system that people can use to build digital forms of money that are very similar to Bitcoin. The only difference is, when these central banks create these currencies, unlike Bitcoin, which is decentralized, these currencies or these central bank digital currencies are actually centralized, which means they have full control over it. They've actually created regulations and they've sent mandates down to all of our banks for 2021 to make sure that we have a digital wallet so that we can actually receive these new central bank digital currencies, right? So whenever they're looking to send out stimulus or send out money for whatever their reason is, they can immediately send it out without using the banks as a middleman, right? So that sounds cool, but think about the opposite side of that. Now that means they have programmable money. What does that mean for you? That means if the government or if these central banks send you some money, they can program it to where you can only use it for certain things. If they don't think that it's appropriate for you to buy Netflix with that money, then you won't be able to use it to purchase Netflix or anything else that they deemed shouldn't be used to purchase that money for. Also, that makes it very easy for them to take your money back from you, right? So by having this programmable money, it gives them extreme capabilities that have never been seen before and really puts us at risk of being more controlled and more subjective to this new overextended government, right? In comes Bitcoin, is decentralized. They can't stop it because of the decentralization of this network. And we see that other resources and tools are being built on the same technology that they're using, but they're using it to combat these oppressive practices, right? They're using it to create systems and tools that we can use to generate wealth that can't be shut down. In the same way that Bitcoin can't be shut down because it's decentralized, there's no one in particular to target, or there's no company to necessarily target. They're building these applications in this new digital ecosystem that operate on the same fundamental principles. So we now have resources and tools to combat these banks who have oppressed us for so long, these banks who have swindled the wealth from millions and millions of our families. So it's a very, very exciting time to be alive right now and to be a part of this nonviolent transfer of wealth, which will likely be the largest transfer of wealth in history, which is transferring wealth from those banks back to the people. Bitcoin is for the people, by the people. Wrapping up, in this lesson, Banking Explained, we talked about the origins of banking, what they were intended for, the evolution of where banking is headed, and why we have to evolve from this current system, and how you can think about this new paradigm shift moving forward to create your own digital bank so that you can reap all the benefits of building your own wealth and building your own digital bank by following this digital bank blueprint. With that being said, join us in the next video. We'll build on top of what we've already talked about, and I'll see you soon.